Hi there, this is Mike Larson, Editor-in-Chief at Money Show. I'm coming to you from the Las Vegas Money Show, and I'm pleased to be speaking here with Mish Schneider, Director of Trading Education and Research for MarketGauge.com. Mish, how are you?
I'm great, so nice to be here.
Yes, I'm glad I got to see you here. Great crowds. I saw that you had a heck of a turnout at your presentation so far. I mean, it's a great environment. What are you seeing? I'll just take it big picture to start. What are you seeing here in this market? I know you have a background in commodities trading and so on, stocks and all of that. So I guess I'll just kind of let you tell us a little bit about that.
Well, it seems that the market has really set itself up for a very stubborn and persistent trading range. And you get a day like today where you had bad news with First Republic and the market goes down, but then after the hours you have Google and Microsoft reporting well, and we have a little bit of a pop in the after hours, and I think that's very indicative of sort of a stagflation environment where the economy is going to have pockets of strength but also pockets of weakness that's going to keep it sort of in this zone, while you have other factors that can emerge out of higher interest rates but also higher inflation.
Are there particular markets you're looking at now and seeing signals that, hey, maybe this might be what's coming next, or why you think we're just stuck in this chop, and what you need to see to break us out of that, I guess?
Well, it's really the topic of my conversation with everybody here, which is we're in a very, very strange place in terms of cycles, because generally market cycles will run 6 to 7 years, but there are cycles within cycles, and in this particular case, with 2021 being so bullish and 2022 being so bearish, 2023 we just are really at the we don't know how long this stagnation can persist, and so there's a couple of great technical indicators that are helping us gauge. Along with that, of course, we're watching commodities, because after a 40-year dormancy, they've woken up. And not all of them, but certainly gold and some of the soft commodities, particularly sugar, has just made a stellar, almost head-scratching parabolic move. So that kind of tells you something's up and it's playing out. We obviously don't know exactly what that will be yet, but that's where I'm keeping my eyes.
Got it. Okay. Talk a little bit more about your methodology and your background. I mean, what is it that you use when it comes to technical indicators and other things to kind of guide your trading decisions?
Well, I was born basically as a trader on the New York Commodities Exchanges, and so I learned how to point and figure chart, partly because I became fascinated with patterns and keeping track of how price would either consolidate or flag or, basically go parabolic or come back down to support areas. All of that I learned without an actual financial education. My background was in special ed. But as I have evolved and got older, now obviously point and figure charts are really great for day trading, but I'm more mini swing trading. And so we've learned different developments of systems that are based on market breadth, longer term moving averages, multiple time frames, and a fundamental component, really.
Okay. You mentioned a couple things that look bullish to you for now, and I assume the foreseeable future, gold, sugar, correct? Is there, is that a long-term trade or a trend people can look into, or is it, is there something that you don't like on the other side of things?
Well, it's such a great question because actually I was talking to one of the attendees here, and he was saying to me, well, when you get out of something and then you don't want to get back in and pay higher, but that is actually the nature of commodities, is that once they get going, they become an extremely emotional trade. So looking at sugar, you look at that chart and you go, oh my God, I'm buying the highs. But if you go back to 1976, it literally went from 20 cents to 66 cents in a matter of months. So if you time yourself in with good risk parameters and you know your time frame, I would say that could still go because of fundamental factors. And the same thing with gold. People say, 2,000, it's expensive. But compared to what? It could go to 3,000. So I think you have to keep your eye on these things as potential parabolic moves, because we're not talking PE ratios here. We're talking goods. Goods that people need.
Absolutely. Mish, if someone wants to see more of the work you do, maybe get some more market education that you provide, where can they go? What's a website that you direct them to?
Well, MarketGauge.com is our website, and we have a financial publishing company, and we also have mgamllc.com, which is our registered investment advisory company.
Excellent. Mish, thank you so much for taking out some time here at the show, and thank you all for watching from the Las Vegas Money Show.